Hello, I'm Benoît. I'm responsible for growth throughout Europe for iVox. I've been in the call tracking industry for 14 years, and what impresses me about iVox is the flexibility of our APIs in being able to create real solutions for our customers. We work with some of the leaders in the industry such as AutoTrader, Axel Springer Group, Adevinta, Zoopla, or OVH Cloud. Give us a call or send us an email. I would like to know more about your business and how our service might help. Wishing everyone a successful and safe European virtual conference.
Marc Stilke is the former CEO of ImmobilienScout 24 in Germany. He's a board member of Idealista and a founder of Pointguard Ventures. And Georg Chmiel, who I've had the pleasure of knowing for 20-something years now, is everything from the former CFO of the REA Group, former CEO of LJ Hooker, a large Australian real estate franchise group, former CEO of iProperty Group, and is now the executive chairman of Juwai, based out of Malaysia. So can we start with, just to help set the scene, get a bit of an overview of your current background and what you do. Marc, why don't we start with you?
Yeah, thank you, Simon, for inviting me to your session. I've been managing 20 years internet companies. As you said, the last 7 years as CEO of ImmobilienScout 24, which is the leading real estate portal in Germany, now listed and traded at 7 billion euros. And since 2015, I'm investing with my own company, Pointguard, in real estate tech companies and alongside private equity companies in classified businesses such as Idealista. And I'm following the classified ecosystem in developed markets, but also in emerging markets like Southeast Asia and Turkey. And that's why I also met Georg in those locations.
Okay. And Georg, a bit about your background.
Thanks very much. And hi, Marc. Hi, Simon. Hi, everyone. So my background is I'm executive chairman of Juwai IQI, which is a digital real estate business. And we'll talk about that in a second. So we're not a portal. We are not a real estate agency. We're a digital real estate business, end to end. I'm also chairman of a company called iCar Asia, automotive marketplace across 3 ASEAN countries, Thailand, Indonesia, and Malaysia, which make up 80% of all the car business. And I have 3 other non-exec directorships. One is 2 fintech businesses, and one is a very important business, which is a software real estate business, PropTech Group, where Simon is the chairman.
Okay. Let's start off by talking about the impact of COVID in the markets that you see. So let's just sort of quickly go through what are some of the things that you're seeing in the markets that you're involved in. And Marc, you've got some fantastic overview of various markets. Let's start with you.
Yeah, overall, I think I can confirm the results of your survey you presented. Depending on the strictness of the lockdown in the countries, agents have closed in spring their shops and could not do viewings. And therefore, we saw in the portals listings were going down, agents were churning or downgrading. But then during summer and fall, transactions have bounced back and listings, traffic, and leads coming back to prior year level and even beyond. I think what my summary would be that residential transactions have been remarkably resilient in this crisis, opposite to office and hotel. Living has got more important to people working from home and trying to extend the place they have working from home. The structural trends towards cities, for example, more flexible living, I think is keeping up and an underlying continuous trend. And government so far has supported people as well agents to keep up with liquidity.
Okay, which is good. And Georg, from your perspective, what are you seeing?
I mean, because we operate in China, ASEAN, and other markets, we literally saw the whole flow of COVID starting in January 20 from China, where the offices were in lockdown, where initially the businesses stopped a bit, but not for long, and then a really massive digitalization and take up of anything digital occurred. And by March, in China, business bounced back. At that stage, ASEAN went into a real lockdown, which lasted fairly long, but it was people were quite compliant with the rules up here. So we had no discussion about whether or not to wear a mask. People just get on with it. And that allowed these countries also to get out of the crisis a bit faster. Australia was then later hit. I would say overall, in our markets, in the ASEAN markets, portal gave quite a lot of freebies. Many agencies stopped their business because they could not operate. Now, in our case, as we are an end-to-end business, which is a former portal and a former estate agency being tied together and fully digitized, we could operate, and we started to pick up the agencies in the market as a result of that. Tourism is very badly hit. I mean, we have domestic tourism, but we don't have any cross-border tourism as Europe allowed it for quite a while. I would say the classic phases of COVID hitting a country was initially people are believing they can flatten the curve. Then they realize they can't. Then they start to fight, and now they think a bit more about the future. So I personally think it has changed the way business is done, the way on an individual level people go about their work, and also in the bigger picture. And I do believe a lot of these changes are here to stay.
Okay. Let's actually start with that point. What are the 2 or 3 major changes that you think are fundamentally here to stay for I guess ever? Yes.
Yeah, me.
Yeah,
I would say.
I'll go to
yeah, exactly. I mean, the working from home element, that there is always a higher percentage of working from home in the future in the lives of people, definitely is here to stay, which comes along with actually a slightly lower need of office space, so a slightly different requirement for office space. The other one is a reversal to a certain extent of the urbanization, where people are moving a bit away from the larger cities, not so much in ASEAN, but more in the Western markets. The other thing is clearly the digitalization of all commerce. I mean, small shops were quite badly hit in cities where there was no proper distribution network which was available for them, you know, like Uber or equivalent type of services of delivering. So I would say, interestingly enough, more cars, because people are afraid of public transport, which is a very, very interesting piece. And then traditional businesses which said, let's hope things will get better, they were hit. And that can be the case from traditional real estate businesses or traditional portals, and new models emerge.
Okay. And Marc, what about from your perspective? What are the 2 or 3 things that you're seeing that are sort of really here to stay?
As Georg was saying, people learned during the crisis that changing behavior and pattern is possible in the way we're working, communicating, shopping, etc. So I think that will have an impact on how digital real estate transactions and throughout the whole process from searching to buying and selling will be. And so virtual tours will be staying. People are more daring to do a mortgage, at least a comparison and a selection online. They do digital rental contracts online. So a rental transaction can be easily done completely digital. So I think these kind of things will stay and will be a digitalization booster towards the value chains and of our businesses, which we're talking about. Where I do not agree to Georg is that even in the Western world, I think the trend towards cities will, in my view, continue. and people want a bit more green and want a bit more space, yes, but they will not probably go back to the true rural side of things. So I would expect the underlying trend towards cities, and also as real estate as a good investment category, especially residential, to stay and to continue.
How do you if you think about this, the coronavirus came, there's a lot of subsidies from government through the first sort of wave and sort of after that to really help businesses keep moving. Everyone's sort of quite cautious, anxious. Then of course everyone lets their hair down. Not that all of us can do that. They let their hair down, okay, throughout the summer period, go nuts, and now coronavirus is if you look at all the charts, going vertical in many countries. If the governments can't keep funding the the shortfall, what impact is that going to have on real estate markets?
I'm more an optimist, so I really believe that, and I'm looking mostly at Europe here. Europe is strong enough to overcome this crisis and not return into really bad high rates of unemployment. So I'm more optimistic, and looking more white than black. Residential real estate will remain an important an asset class, and also living for people will be very important and will even more get important. What we potentially see is people are more cautious in terms of leveraging the mortgage. People might tend to rent more than purchase. And also we see in some markets like Southern Europe, rental prices coming down. So to make living more affordable, and that's probably a reflection of the current market condition. But overall, I don't expect things to change so dramatically, other than that structural trends and changes which have been pre-COVID will be boosted and accelerated.
Okay. Georg, how do you see businesses, especially in the online real estate world, changing what they're doing? How have they adapted their business models? And do you think that they're changing the dynamics of an industry?
So the one thing which was literally happening at our company when the lockdown was announced, we had to digitize or tie the two businesses which had merged only 3 months earlier together within 2 weeks. So we didn't have much time. So we tied it together. I mean, it wasn't probably the most elegant solution, but it was working, and and the business could operate. I would say that's one of the key things, that you just initially create something to continue to operate. If you can't operate, I mean, if nobody can do anything with your leads, or if you can't show the units or the stock which you are selling, or if you can't do a transaction, can't take payments, etc., then it's really difficult. And the good thing is that in many of our markets, internet penetration is very high, and so the mobile phone reach is very high. I mean, we've got more in ASEAN, more mobile phone users than in the US now, and also far more people using payment systems online. And we also have a lot of these super apps in our market, which bear from the fact that initially we didn't have such a good infrastructure. So people automatically from day one build apps, and that's also in our company, which are literally for the agents, also a custom app kind of, which give an agent the full toolbox of a CRM system, ERP system, etc. That helps. There's a few weak points still in the chain. One is the whole financing or mortgages, where banks simply stopped operating. So we had for 1 month a slight slowdown because the mortgage applications were piling up in the bank, and we're working currently on it to get really directly connected to the bank. So if a second or third wave hits, we can operate faster. The other one is title transfers, but that's not as dramatic. I mean, that can wait a bit. And most importantly is that the initial sale is happening. So I would say that was probably one of the big changes. The other change is that people choose their employer not just on the basis of the brand and other things, but if they can actually operate in such markets. So we had the number 3 agency group in Malaysia, which is not a digital agency group, give up and came over with 1,000 agents and said, we want to be part of your digital agency. And we've picked another one up this week. And we're now targeting airlines, which is also an interesting one. So we are running a campaign to target the 24,000 employees of AirAsia, which have been laid off, who are all very good in interaction with clients, and we provide them free training to become estate agents in a digital way. So I think there's a lot of opportunities actually in there. I mean, the worst you can do is hope things will get back to where it was, and the best you can do is really embrace it and make the best of it.
Okay. And Marc, from your opinion, who are the what are the lessons that are sort of being applied? You know, who's sort of winning out of this whole competition?
As Georg was saying, professional agents with a strong brand and a digital modern way of working and managing the whole value chain in a really efficient way, from lead generation to listing to transacting, will win market share and will evolve stronger out of the crisis. I think the market leading portals will win share, and as we saw this even looking at the trends today, that the leaders benefit more than the runners up, and they will keep their pricing power and remain a very strong, cash-rich, resilient business model, justifying the high valuations which we see in the stock markets. And also, I think the Idealista transaction during the crisis was a good proof point that an investor was happy to buy at a good valuation classified company during the crisis when you could not clearly see how that would end up. And yeah, the third one is also what Georg was saying. I think you need to think how you can digitalize and change the whole value chain of the whole process. And there are still many manual, analog, and inefficient steps in financing in real estate transaction. And that needs to further change, and that will change. And maybe last point, when I look at portals, they will need to evolve from a two-sided market, buyers and searchers on the one hand and agents, to a three-sided market, taking owners as a real target group into consideration, not at the time of sale, but even pre-sale, because vendor leads and treating owners during the life cycle will become a third target group for portals.
Okay, and how do you see that emerging over time? Is it through a series of tools and products provided to them? Is it going direct to them and cutting the agent out of the process? Is it working side by side with an agent? And how would the agents then sort of feel about that? It's
as long as we had at ImmoScout private listings for 20 years, it has been a very delicate and controversial topic. I always kept saying that you agent need to be where the market is and where the sellers are, and that's justifying people who have decided to try to sell or rent on their own. They might be successful, they might not be successful, and then they will need your service. And that's, I think, still true. So I see this happening in parallel. So if you have a vendor or if you have an owner as a target group, and then it comes to a decision to sell or rent, then you can either enable the agent to make a good offer, or you enable the owner to do it directly. I think that will happen side by side and still create a delicate relationship.
Do you now, Georg? You're at that sort of interesting point where, yes, you have a classifieds business, but it's bolted into a transaction engine. How does that then work with the agents who advertise on the classifieds business, but your co-opetition, you have co-opetition built into the whole process?
I mean, the first thing is that most classified businesses actually target used product, meaning in either established properties or used cars. In our market, it's a new property business. So on Juwai, which is obviously also a more traditional type of portal, there's a lot of listings, but these are all secondary listings. That's not where any money is being made. The money is being made in the new project. And in the new projects, we go directly to the developer. We don't compete with the agents, we go directly. If agents want to work with us at co-broke, they still can. But I mean, the secondary business is I would say it's a nice add-on, but the money is being made in the primary market.
So Marc,
it's also important to know that it's a completely different business. In new project sales, you're in a B2C business. In a classified business for used properties or established properties, you're in a C2C or a C with an agent, B2C type of scenario.
Okay, so Marc, if do you ever see portals, the major portals, as they start to get closer to the homeowner, getting into the transaction themselves, starting to charge the commission or capture a percentage of the commission directly? And at the end of the day, they're capturing a percentage of the commission because they're charging a fee, right? It's got to come from somewhere, and it comes from the agents. Yeah. But it's not overtly from the commission. It's not overtly tied to performance. Do you see them becoming more tied to performance and starting to capture more of that commission pool?
Not directly. So I don't expect portals to become agents or brokers. I think they will get closer to the transaction, and whether this transaction is then facilitated through an agent or through the owner by himself, that doesn't matter. I think the fee will be paid either by the owner or by the agent receiving the vendor lead, and then receiving buyer leads and receiving a CRM system to do the thing. And I could see, at the moment we have listing fees and subscription fees, I could see that the future portal pricing model could be a combination of a subscription fee plus a variable share, dependent on the commission, dependent on the value the portal has been part of the transaction.
On a slightly different topic, and I'm looking in the Q&A, and there's a bunch of questions coming in, and they're all about the same thing: iBuyer, Zillow. Okay, now that clearly is one of these sort of crazy models that pre-COVID was going really well. COVID comes, the valuation plummets, then miraculously it comes back again. What's your views on this whole iBuyer model, and whether it's even relevant outside of the US? Forget about inside the US, because that's a strange place as it is. But outside of the US, is it relevant in Europe and in Asia? Georg, let's start with you.
So a model as Zillow does it I don't think is relevant anywhere, because it doesn't work the way it's operated. Because I mean, I can't see any sense in losing money on every transaction. The principle of taking ownership of a property can work, but I don't think it's necessary. I think an online portal can use the data and can use all the infrastructure they have to do the transaction without actually owning the property in a very, very efficient way. So for us, it has never been an issue, and it's probably a way of growing market share in revenues at a cost for a company like Zillow.
And Marc, from your perspective, do you see this iBuyer model gaining real traction in, for example, European markets?
No. I think the transaction costs in Europe are too high, given the taxes you need to pay when buying and selling. And so far, I haven't seen legal ways of circumvening this. And even if capital cost is low, and if brokerage cost may be low, the transaction costs between 5 to 10% on both ways. in a not booming market, I don't see this really taking off. What I see is more flexible models, so rent to buy and other models, but this is not an iBuyer model in my view.
Do you want to talk a bit more about these sort of rent to buy models that you're seeing emerge, and what do you like about them?
They depend a bit on the culture. I think in Germany, people are buying real estate and then inheriting them. That is very different to Anglo-Saxon market. On the other hand, there is a target group of people who doesn't have the equity to finance or get easily a mortgage, but is a good risk because they are young after their studies and start to earn money. And for those customers, and that would provide value add in addition to the flexibility that has. So if you choose to then change location, you might be more flexible. So these kind of models where this is a combination of mortgage and a real estate, where third party provides flexibility and some financing over time, that I see for a niche part of the market getting traction.
And final question before we wrap up is, Georg, if you rolled out your crystal ball and had a look inside of it over the next sort of 3 to 5 years, who are the sort of winners out of this? What are the characteristics and what sort of segments are they targeting, and who are the ones that you may not want to be? You don't have to name names, the type of characteristics.
You mean out of the COVID crisis, and who will after?
Yeah, after the COVID crisis, but we're looking now over the next 3 to 5 years.
Mm-hmm. I mean, I think one of the big winners in our markets will be the consumers, because the models which, for example, we are building and really growing rapidly, will allow for the consumer to become really global residents and say, how is it for me? And because at this moment, if you picture someone sitting in Vietnam or someone in the Philippines trying to buy something domestically or cross-border, there's a lot of players of different levels of quality. It's very hard to compare. It's also very hard to compare different models and so on. And I do believe that online-driven end-to-end businesses are able to provide a better way of comparing and create a higher level of trust with high quality content. So I do believe traditional real estate businesses will have it tough even after COVID. I also do believe that, personally, I do believe that the future of these traditional classified businesses, in particular in Asia, is coming to an end. And I do believe that most classified businesses will add over time some form of transaction capabilities, be it either on auxiliary services like mortgages, etc., or be it in the core market. So eventually they have to compete with their customers, so to speak. And given why do I say it's probably more in Asia? Because in Asia, portals target more the new properties, so there's less competition with the agents. If you think of a portal somewhere in a large Western market, often 75% of the revenues are from secondary agents, and it's very hard to go into transaction for such a portal. So I would say those who literally solve the next level of questions of problems will be the winners, and not those who grow revenues for the sake of growing revenues.
Okay. And Marc, from your perspective?
Yeah, consumers, for the sake of transparency and competition, which is enabled by digitalization. Residential real estate owners will win because that will be an important asset class looking forward. And market-leading portals who evolve their business, as Georg said, into this three-sided market and going deeper into the value chain.
Okay. Marc and Georg, thank you very much for participating on the panel today. It's always great to hear the wisdom of people who've been in the industry for a while, for quite a long time. And I think, it's been super interesting what happens over the next 3 to 5 years. And honestly, if we go back, and let's just be honest, right? If we go back to 2001, 2, 3, I don't think we really thought we'd be sitting here in this environment with, Georg, you're running a transaction-based business. Marc, you've got this big investment fund looking at all these types of businesses as well, and in this COVID world. So I think suffice to say, expect the unexpected, and be agile, be nimble, and be in charge of your own destiny. I think is probably the most important thing for everyone out there.
Hello,
So thank you.
I'm Benoit Dose. I'm responsible for growth throughout Europe for iVox. I've been in the call tracking industry for 14 years, and what impresses me about iVox is the flexibility of our APIs in being able to create real solutions for our customers. We work with some of the leaders in the industry, such as AutoTrader, Axel Springer Group, Idealista, Zoopla, or OVH Cloud. Give us a call or send us an email. I would like to know more about your business and how our service might help. Wishing everyone a successful and safe European Virtual Conference.